Hello traders and welcome back to the Forex Geek where we dive deep into the tools that can help you make smarter trading decisions. In today's video we are going to be talking about the Keltner Channel swing trading strategy, which is a powerful method that combines trend following and volatility analysis to give you precise entry and exit points in the market. So if you've been struggling with inconsistent results or finding the right setups in your swing trades, this strategy could be a game changer for you. So stay with me until the end as I'll break down exactly how the Keltner channel works and show you a step-by-step approach to using it effectively in your trades. So without wasting any much of your time, let's get started. I'll start by explaining the Keltner channel. We are talking about swing trading, so we are on the 4-hour time frame on Euro USD. And the Keltner channel is a technical indicator designed to help traders identify trends, volatility, and potential entry or exit points in the market. It consists of three lines: a central moving average, typically a 20-period exponential moving average, and two outer bands positioned above and below the EMA. These outer bands are calculated using a multiple of the average true range, which is the ATR. The multiple can be set on the indicator. You have the ATR length set at 10, which is the default, and the ATR, this outer bands measures market volatility. The result is a dynamic channel that adjusts to price movements. Unlike Bollinger Bands, which use standard deviation to calculate their bands, the Keltner channel relies on ATR, making it smoother and less reactive to short-term price fluctuations. When the price moves towards the upper band, it indicates bullish momentum. You can see that happening right here. And when it moves towards the lower bands, it indicates bearish momentum in the market. So the middle line often acts as a dynamic support or resistance level during trending markets. When the market is trending, the middle line acts as dynamic support or resistance levels. You can see this right here, this trend line, and this trend line is based on the middle line. So that is another thing you should note about the Keltner channel. Now you should also know that the Keltner channel also helps identify overbought and oversold conditions. For instance, if the price consistently closes near or outside the upper band, as you can see here, all over this area, if price consistently close above the upper band, it may signal overbought conditions, while prices near or below the lower band could indicate oversold conditions. Additionally, the breakouts beyond the channel can signify strong momentum and potential trend continuation. We have one happening here. This is a breakout, decisive breakout supported by volume, and this shows that we should be expecting the trend to continue in the side of the breakout, the direction of the breakout, or a trend continuation. So that is that for the Keltner channel. It's very easy to understand. Now, how do we trade? How do we swing trade with the Keltner channel? And that's where I'm going to tell you about the Keltner channel swing trading system which I use. The very first step is to set up the Keltner channel, put it on your charts, and set your default settings to be the EMA length should be 20, multiplier should be 2, the ATR should be 10, and it should be at average true range. Also your chart. And once you've set your Keltner channel like this, the next step also, and ensure you also use higher time frames. We are talking about swing trading, so you shouldn't be on the 5 minute, you shouldn't be on the 15 minute, you should be on the 4-hour or daily chart to focus on meaningful price swings. The Keltner channel will help you identify pullbacks, reversals, and breakout opportunities. Now, the next step is to identify swing trading opportunities. How do we do that? First, in trending markets, look for price action when the channel slopes upward, which is uptrend. Now, how do you know that the market is trending bullish or bearish? It means that price will be above the 20-period EMA. Here we have price being above the 20-period EMA, and after price moves above the moving average, which is this, you should then look for where the The Keltner channel is sloping upwards, and then we should be looking for potential swing trading opportunities. So the very first step in all of this is to first confirm the trend. You can also use additional moving averages, like for example, let me simplify this. We're gonna use a 100 period moving average to actually tell our trend. Remember, I said that you can use the 20 period EMA to tell your trends, but the 20 period EMA is likely to give us false signals because it just keeps on going above it, below it, above it, in ranging markets like this one that was happening right here. So just like to use the 100 period EMA to give us a clearer view. Are we bullish or are we bearish? So we have price being above the 100 period EMA right here. Now, after identifying the trend direction, we should then look for swing trading opportunities from this area. Now, the first step is to wait for pullbacks, wait for price to pull back, and then give us a market structure shift after the pullback. Also, you can expect price pullbacks to this middle line. Sometimes not every time price gets to the middle line, but yeah, you can expect price pullbacks to the middle line and then a break above the high to signaling a continuation, and this shows us that yes, we are indeed continuing that bullish trend. Then next step is to enter your buy trade, stop losses below the EMA, and take profits all the way. Could take 1:2 or 1:3 depending on your trading plan. I prefer to stick to a 1:2 risk reward ratio. And remember, we are swing trading, so this could last for some days, weeks, and all of that. So let me look for another wonderful example which I can use to explain. Now we have one here. We have price being below the 100 period EMA signaling bearish momentum. We also have price being below the 20 period EMA signaling bearish momentum. The next step is to wait for pullbacks. Now you have this pullback to the middle line. Remember, the middle line can be used as dynamic support and resistance levels in trending markets. I mentioned that earlier, and then you wait for price to continue to the direction of the trend or to give us a change of character. Now, after you have that, you could just look to place your sell trade to your stop loss above the high and take profits all the way down. Just take target a 1:2 risk to reward ratio, as you can see here, and this is perfect. Look for another wonderful example. Okay, we have another good example happening right here. And see price being below the moving averages, and also we have this pullback. Price didn't exactly go back to the middle line, but price after pulling back we had the continuation, and this just signals to short all the way, stop loss above the high or above the middle line, and take profits at 1:2 risk to reward ratio. Very straightforward, very simple. I advise you to go and practice the strategy. It's very easy. Now, you should always manage your risk. Swing trading requires disciplined risk management, and since trades can last several days, calculate your position size using ATR to ensure your trade aligns with your account size and risk tolerance. Aim for at least 1:2 or 1:3 risk to reward ratio to ensure profitability over time. As price moves in your favor, consider trailing your stop loss along either the middle EMA or just beyond recent swing points to lock in gains while allowing room for further movements. Remember, you are swing trading. You should also ensure that you are on the 4-hour or daily time frame as you swing trade. Now, let's look for one last example before we call it a day. Half price going above the 100 EMA here and above the 20 period EMA there. Then we have the pullback. Price reacting off this middle band, which is the 20 period EMA, and failing to go below it, below. Then we have price giving us this break. We have this change of character happening inside. If you are a conservative trader, you could wait for the outer for this swing to get taken out before entering any buys. And then you could place your buy entries after that change of character to the upside. Stop losses below our moving average or below that swing low. Take profits all the way. 1:2 risk reward ratio 1:3. It's very easy. It's very easy. you can trade it, you can do it. See price moving above the 100 period EMA here. We have the pullback and we have the continuation price breaking above here, and just look to take our buys from here, stop loss below this low, and take profit 1:2. Like just keep swinging and swinging every market move, just keep catching it using this swing trading strategy, using the Keltner channel swing trading strategy. Alright traders, you've come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.